Supreme Court tariff ruling could come today at 10 a.m. ET.
Euro US dollar price. Forecast still ranging, mounting uncertainty favors the downside.
XRP halts rally despite futures and ETF inflows rising. U.S. stocks may see further downside in early trading.
U.S. retail sales climb more than expected in November.
Captain tried to change course before fatal tanker crash, UK jury told.
U.S. headline producer prices rose by 3.0% in November.
NASDAQ technical analysis. Answers, is the market startled?
Canadian dollar steadies as oil rebound offers support. Scotiabank. Exclusive Brazil billionaire Batista met with Venezuela's Rodriguez, U.S. officials.
Is the pullback in U.S. natural gas prices overdone?
See you in
US
2
dollar
minutes.
remains range-bound near one-month lows after mixed U.S. data. Let's go!
G'day, how are ya? How's your mum? How you guys doing? You hot to go, HOTTOGO? Yeah, me too. Boom, 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 boom. All right, our execution partner today is TRADARSway.com. Trustworthy and ethical broker I've been working with for about 12 years, I think it is. 12 years? Yeah, pretty serious relationship, huh? Yeah, 12 years is legit, is all I'm saying. So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So, good morning. So what do you want to do? Technical analysis, fundamental analysis, trader psychology? Big picture, little picture, no picture?
Euro US dollar remains range-bound near one-month lows after mixed US data. Canadian dollar steadies as oil rebound offers support, Scotiabank. Exclusive Brazil billionaire Batista met with Venezuela's Rodriguez, U.S. officials.
Supreme Court tariff ruling.
How does he
come
do
today
that?
At 10 a.m. ET.
Sorry.
The pullback in
That's
US natural
that's our
gas
squawk
prices
box.
overdone.
Sorry.
Euro US dollar price. Forecast still ranging, mounting uncertainty favors the downside.
XRP halts rally despite futures and ETF inflows rising. U.S. stocks may see further downside in early trading.
So that's our squawk box. Sorry, all that news just came in. So the byline used to be, hey, trader, have you heard the news? So once you've made your decision on what you want to do today, which is generally fundamental and sentimentally based on market sentiment, then you go to your charts, right? Well, what you can do is you just run our Squawk Box in the background while you're going through your charts and doing your trades and managing your positions and stuff like that, and you can still be caught up on the news. That's part of our free subscription. Yeah. Wayne, on the euro dollar, could we expect downward pressure? Well, you're saying, so you're like, expect downward pressure. Okay, whatever. And then you're like, we haven't made a higher high on that time frame. Well, isn't that the issue? Retail sales came out high. Inflation came out high. Wholesale inflation. Later today, in about 19 minutes, we got existing home sales. Yeah, baby, yeah. They're going to be low. They have been low. They're trending low. We have all this data, so it's not a surprise, but that's the existing trend is down and the consensus is down. Most of the money is going into new homes, not existing homes. But we track all of this. Yeah, we do. What do you guys want to focus on? Let's do a vote. Day trading, swing trading, or position trading? I know you've probably sent me a ton of emails. Keep sending them. Send me more because I keep getting told they're fixed, and then it's not fixed. And if you don't tell me, I don't know because I'm told the opposite. But we are changing a lot of the infrastructure on how we handle that. And then that change made other things forced to be changed, and then we have changed those, but it should be working. But if it's not, I need to figure that out. So once again, send me an email, wayne@traders.com, and I'll get that working for you. Okay, go ahead and answer. What do you want me to analyze? You're the boss. I can't do everything. I've already spent 2 hours today going over all of this analysis with subscribers.
Euro my US dollar stabilizes
I'm going to wait
after
until you tell me.
pullback from December highs. Scotiabank.
The question is day trading, swing trading, or position trading?
Euro my US dollar stabilizes after pullback from December highs. Scotiabank.
Euro US dollar remains range bound near 1 month lows after mixed US data. Canadian dollar steadies as oil rebound offers support. Scotiabank. Exclusive Brazil billionaire Batista met with Venezuela's Rodriguez U.S. officials.
Supreme Court tariff ruling could come today at 10 a.m. ET. Is the pullback in U.S. natural gas prices overdone?
Euro U.S. dollar price. Forecast still ranging, mounting uncertainty favors the downside.
Okay, we have
XRP halts rally despite futures and ETF inflows rising.
3 out of 33 people have said day trade. 1 says position. All right, well, day traders. Have you already analyzed the medium and long term? John, Texas, you already know where you think we're going to be in a month? Do you already know where you think we're going to be in a week or two? So therefore, you can't possibly do a day trade. Okay? Then that was wrong. So you think of it this way. You looked at a map and analyzed where you could walk tomorrow. But you haven't looked at the map to say, well, where is it that you intend to want to end up? And so you should start the strategy with, where do you want to end up in a week or two?
Hype gains momentum amid staking.
Jiminy
Open interest
Cricket
rebound.
Squawk Box while I'm trying to talk. I think
Oil prices rose after surging on Iran supply risks. U.S. inventory build in focus.
Yeah, it's because I'm logged in multiple times. QuantBox shouldn't be working. No. Everything's over at TRADARS. So if you have a QuantBox subscription, you have a TRADARS subscription. I've sent 2,000 emails to you. So you should be informed, but your login should be working at traders.com. But if you haven't been a member for a while, all of QuantBox is inside of TRADARS. But we do very, very, very significant analytics, both not just fundamentally, but technically. And we do a lot more. QuantBox was based on algos, very binary if-then type stuff. TRADARS is built and then rebuilt even on top of very, very, very granular artificial intelligence, specifically on relational mathematics to fundamental data. But then I've also taught it how to trade technically, and it's very good. And then we're able to put all of this stuff together. And so, yeah, it's next level. I mean, it's truly out of this world. But what I was saying is, if you don't know where you intend to get, you're not really trading properly. If you don't know where, like for example, like 3 days ago, I think we said with silver, where were we? In the mid 60s? And we analyzed it technically and fundamentally and using a bunch of other things like seasonality. We're like, oh my God, silver can go to 88 or 100. Now, I thought it'd be a couple of weeks. We're practically there now, just in like 3 or 4 days. But it wasn't my opinion. It was mathematics. Yeah, so very interesting stuff. So anyways, this is our Squawk Box, everybody. It's free. You should have your free account at TRADARS.com. Radars for traders. It's free. This usually would cost somebody $100 a month, I guess. I used to pay for a Squawk Box, and I paid more like $300 or $400 back in the day. You can have it for free. I built it. Cost me money, actually. Cost me a lot of money to make this work. You can have it for free. TRADARS.com. No tricks. No sales pitches. No nothing. If you don't have any money, I can't convince you to invest it into data. But if you're a serious trader and you're not undercapitalized, well, this is a pittance for you. Well, it's free to use, but if you want to upgrade to the other data, like think of it as a freemium model, then dude, it's a pittance. Plus, it's a tax write-off. Like, dude, what, you don't want real-time live data based on a trading large language model that I personally made? Really? All right. That kind of stuff. All right, so we'll go into day trading, but you know what? Actually, I'm going to override that, in particular because of John. John, it's your fault, John. But we have an opportunity to educate. I've already covered a ton of stuff. Like, again, if you want detailed webinars, I spent 2 hours this morning already going through all the analytics. So this is my opportunity to just preach and teach, right? So John from Texas, yeah, he's like, yeah, day trade. And I'm like, hey, do you know what your medium and longer term view is? No, I have no idea. Then this is an opportunity for everyone. If you don't know where you intend to be, you're not going to get there. So you might want to look at least swing trade and try to line up medium term with shorter term. What have these assets done over the last 7 days? It's a bigger picture. So if Ethereum's been up 7%, you probably don't want to sell it. Hey, Lucas. Good to see you here, Lucas. You probably don't want to sell it. Doesn't mean it's not sellable. Now, you could open up your chart and you're like, well, Wayne, if you look at this technical analysis, if you look at this pivot point, if you look at the, whoa. What is the basis of trading? Find a trend, in this case up, buy a dip. Anything else beyond that is overcomplicated. So the first thing we're trying to do is what's happening in the market. What's the sentiment? Because we're on a sentiment tab. What's the market doing with Ethereum right now? Or for that matter, how about all of crypto? Ethereum, Cardano, Solana, Bitcoin, up, Ripple, up. Oh. Well, maybe crypto's up. Do you want to sell it? Okay. So anyways, gold is up. It's a fact. Yields are starting to move. Silver at 91. This is like crazy. It was higher than it, but anyways, holy smokes, huh? So what you want to do is figure out what's moving and try to line up what you do. Now you can filter all this by asset class, right? That kind of stuff. Cool, right? Yep. It's all nice. And then you want to check risk. See, we're still in sentiment. The question we're trying to answer is, how does the market feel right now? Things improved recently, just in the last few hours, in fact. Oh, we've had news come out. We've had London open. Now we're into London afternoon. New York is open. So a lot of things have changed even in just the last few hours. But we're neutral to mixed. But the other thing to look at is, we were very happy at the end of December. And then things cooled off quite a bit. Are we going to move back up? Well, that's a good question. But at least you know right now, okay, where we stand on risk tolerance. You want to line up your trading with real market conditions, not what you want or how you feel. How you feel is irrelevant to the market. The market doesn't even know how you feel, nor does it give a damn. So your job is to figure out on the aggregate, on short, medium, and long term, worst case, best case, base case, or whatever. What is everybody else doing? And then you want to try to go along with the herd. Right now, it's sort of like recovery to flat. Things used to be a heck of a lot better. Now, you can go farther out, unlock fundamentals, and then go to seasonality and say, well, what does risk tend to do in January and February, too? You can look into the future. And what is normal? Because now it kind of begs this question. What typically happens to risk for the rest of January? Is down typical, or is a big recovery typical? Okay, you want to go through normal first. That's what we call seasonality. So I have 20 years of Januaries and 20 years of Februaries for every asset class on the planet that we care about. And guess what? Past performance does not predict future results, but it gives me clarity on what's normal to figure out, well, where we may be going in the short run. So you want to, so you're like, well, what about risk? What would you look at? Well, I could look at VIX. I can look at SP 500. I can look at the dollar. That's pretty good. If you want to throw in gold, throw in gold. I got that. Or if you prefer silver, the poor man's gold, do whatever. We have all the data to tell you what's totally, absolutely normal. And then you would say, well, what's going on at the Fed? What's going on at the Whiskey Hotel, otherwise known as the White House? So on and so forth, right? What's trade, interest rates, inflation, expectations, whatever. But you say, so what's normal, and then what could be abnormal? And then you start to get a better sense of reality. Well, the cool thing is the market is making all these decisions. All these different types of traders are making these same decisions. Oh, it's funny. I see what Aiden did. I didn't ask him to do it, but he's doing it, which is interesting. You got to be careful with what you ask for. But anyways, he's put in every single crypto and is using it. Well, I don't need 9 assets in this analysis if they're all highly correlated. So anyways, I'll fix that. But we want to look at volatility and gold and Bitcoin and yield spreads between the 210. You want to look at DAX. You want to look at high yield corporate bonds. You want to look at the yield on the 2 individually, yield on the 10 individually, euro dollar, investment grade bonds, dollar index, the Nikkei, the S&P 500. Probably want to throw in, we already got euro dollar, so we don't need these. So I'll clean this up. We don't need polka dot, y'all. Crude oil is cool, right? And so we should be able to analyze what all these, because think of them as different traders. What are they doing today, this week, this month? And what I'm proposing to everybody, in particular to John, is like, well, how do you make a decision today if you don't know what has been? Which way is the wind blowing? Doesn't mean that's how it'll blow today, but you should still know. And then with seasonality, does the wind tend to blow, let's say strongly this time of year or not at all? When you're out at sea, it's very unlikely, like, let's say the wind is blowing west to east. And then a different time of year, east to west. Okay, well, the rotation of the Earth and the circular flow of thermodynamics in the oceans prevents that. Luckily, we have physics. But there are times when it blows and sometimes when it doesn't. We call so you have to know the trade winds, and then you need to know seasonality, and then you can figure out, well, what's likely today. And if you only have today, then you have no bearing. You don't know where you're going, and you don't know how you're going to get to where you're going, but you don't know where you're going anyways. So you would never know you got there. My proposal is you would start longer term and work your way down. And so if you've already set yourself like, okay, volatility is falling. What should I do? Give me a trade idea, guys, based on the VIX falling over the last month and over the last week. And don't say VIX. No. Turn that into a trade plan on a different asset. If I could prove volatility has been falling medium and long term, what should be my assumption that I test today using things like technical analysis? Bueller? Hello? VIX falling. What do you do? Type in a question mark if you don't know. VIX is falling. Give me a trade. There you go. Yeah. Thank you, Lucas. 100% right. Buy the stock market. Risk on. Done. How about Bitcoin? Done. But these things are already happening. Okay? They're already happening. Risk on, crypto up. But crypto's already up. Why? VIX has been falling. So today you would say, I wonder if that's going to continue. We don't know that, right, John? But we know it has been happening. So you're like, oh, well, I like to try trade Bitcoin. So I wonder if I have an opportunity to buy a dip. Okay. Meanwhile, dollar flat. So that's where you would skip then, John, to say, okay, vol down on the medium to longer term. I want to buy a dip in risk assets. How about pound yen? That's a risk on asset, right? Well, what do we do? Well, we can go to trend and see, well, how is it doing? So we want pound yen. This is a little bit of a glitch in there. It says neutral. See how fast I am? Now, I'm surprised by that, but it is what it is. Let it load. There's a glitch preventing it. There we go. So neutral. I'm surprised it says neutral here. So this glitch it's struggling to draw the price line. Don't worry, I'm working on it. But here's what we know. Okay, again, I'm talking to all of us, but particularly John. In the short and medium term, VIX has been falling, which you'd have basic assumptions. Then risk on assets would benefit. One risk off asset is pound yen, and over that medium and longer term that VIX is falling, it's been going up. You can see green up, which is long term. The medium term is up. And on the short term, it's down. But this is what it's saying. It did this, and now it's doing that. Well, if you're a bull, what you're trying to do is measure a top and a bottom, let's say using Fibonacci, and you're trying to analyze the opportunity of doing this in the future. So we have the first and second leg here, long and medium term up, short term down, as you can see here is drawn. Well, what we're trying to look for is this. So is this an opportunity or a threat? Well, it's actually still an opportunity. And now you want to do some proper technical analysis to see, well, is there anything in here that could act like support? Yes, it's a Fibonacci. Is it a pivot point? Is it a moving average? Is it an oscillator? Is it a psych level? Is there some reason for this to actually act as support? Then you can drop into a smaller time frame still, and then see it come down. And if it does reverse and start heading up, you take your long there. And then this negative slope turns to a positive slope, and this neutral goes to bullish and then potentially bearish. Because you know where we're trying to go, John. Up. Cool. This might help me actually figure out where the glitch is. I thought it was the price, but it's not price. Does it go away if I can get it to turn? So glitchy. Day trading? Ooh, it just might be day trading. Cool. Might have learned something. I don't know. No, it is just good. All right, so it's not. All right, I'll figure that out. But you see the logic, though? That's what I'm trying to get across. If you don't know you're a bull or a bear for, let's say, the next few days or the next few weeks, determining if you're a bull or to bear today is just random, and you're trading noise. And you're not going to be consistent. So that's why we have swing trader or position trader. It'll help you identify those better. I think I'll just jump to technicals. So now you know you have your own lens, John Texas, where you're like, okay, I'm long-term bullish on the yen pairs. So I wonder if I have an opportunity to buy a dip today. Because if you're a bull, you know to buy a dip at support. There is no other thing. Let me say that again. It's so important. If you are a bull, medium to long term, the only thing you do is buy a dip at support. But you don't know to buy a dip at support unless you know where that asset price is going. Now, a day trader that doesn't do it isn't able to quantify the potential of today being up or down. And very often it looks like it's going up, but it's really going down. And so you enter a trade and it works for a little while and then it collapses. Well, you don't know that it's long-term short. It might be up for the next few hours, but it's probably going to be down for the next few days. And you didn't know that. So it looked bullish to you. You had a moving average crossover that looked good to you. So you bought it and it went up for 2 hours and dropped for a week because you lost sight of the why it's moving up or down. And the why is much longer term. Right? Like, do I have my platform up? I do have my platform up. We haven't looked at this in a while. Look at this. I'm now 1,000% in profit. I've been in this trade since July. $1,000 internal rate of return. Okay. I risked $114 in cash to make $1,100 in return. Yeah, that's 1,000%. Okay, multiply that by 10 or 20, and you're off to the races, huh? But that's right. That's just logic. But if I had no idea what was going to happen tomorrow or the next week or next month or what normally happens this time of year, I can't do stuff like that because every day is a new day. You wake up every day and there's no history. And you wake up every day and there's no future. So you say things like, well, I guess London produced a green candle, so I guess I'm a bull. No. Because the green candle from the London Open came from a whole bunch of people that actually did research and bought before the London Open. And they made it go up. So if you wait for them to make their decisions and then deploy all their capital, at best you're picking up crumbs. At worst, you're going to get crushed on their profit taking, and they're going to get in their Bentley and drive back to their beautiful home. And you're riding a BMX bicycle, even though you're an adult. Yeah. So whatever. I know that's cruel. So what do I think about gold? Every day. Wayne, what do you think about gold? The other one I like is, Wayne, how do you feel about gold? I feel happy like a room without a roof. I feel happy about gold. What do you mean happy? How do I feel? I like the way you feel. Mm-hmm. What do I think? What do I know is the best question. What do I know about gold? It's on a lot of people's minds. I bought gold like 6 months ago and been adding ever since. So the fact that gold is ripper hot again, yeah. What does that have to do with today? Where were you a month ago, right? So that's where we look at things like, oh, it didn't load. Oh, interesting. It loaded earlier. Oh, I know, but this, I think, has been fixed, right? But that's So this glitched earlier, and it was interesting because it turns out I wasn't doing technical analysis. So we fixed that, and now this doesn't work. So now the fundamentals don't work. Oh, well, I got something to do today anyways. But the idea is if you look at seasonality, you look at institutional positionings, you look at buying and selling of gold by central banks, you look at hedging, and then you look at charts, two different things, basically price and time. You can punch out a 7-day target and a 14-day target on the charts using statistics. We're bullish, we're aggressive, we buy dips, off we go. And that's funny, it's even pulling the wrong price. So this definitely glitched in the last hour. All right, I'll get to it. It's only because I tried to fix this. So I fixed this and then broke that. I can get it. But at least it's there, right? Look at all these different ways of making decisions. Okay? Cool. And of course, we have that for anything you want. And you can change assets, crypto, currencies, stock indices. And then I propose we do some technical analysis, huh? Good. But before you get to the technical analysis, you need to know what your strategy is. Are you a bull or a bear? Are you a buyer or a seller? Do not look at a chart to decide what to do. Funny, my fixing broke it. Well, I'll refix it all. Unless it just hasn't loaded. Come on, Bubba. So that price is right, and that's probably correct. Sometimes it takes a few seconds to load, but I feel like it's not going to load. Yeah, so anyways, I fixed a glitch in the executive summary, and then it killed everything over here. All right, I'll fix that. Not a big deal. So the COT score comes from here. Okay, so we got the COT score. And the econ stuff comes from here. Existing home sales came out this morning. And we haven't updated yet. By the end of the day, it will be. Here's new home sales. Housing starts. So we're not building as many, but the inventory is selling. Nobody seems to be buying existing homes. So there's an uptick in new homes in general. Houses being completed. Prices are falling. Mortgages are flat. Supply is falling. Interesting. Of new homes. Yeah. Yeah. So when we look at that, now mortgage rates should fall because the Fed will probably cut at least a couple of times more this year, maybe once in the first half, maybe twice in the second half, so maybe 3 times this year. All right, so if that happens, mortgages come down, but we have a falling supply of new homes. And sales are rising here, not month over month, but over the last few months. So I wonder if prices are going to turn north. Okay. It's interesting. We're low on let me put it again, and maybe I need to organize this a little better, but the supply of new homes is low. The amount of new homes being finished and put into supply is down. and the number of houses starting to be built is falling. And yet, in general, especially over, the last, let's say the last quarter or two, sales are up, but inventories are down. So we're not building houses, but people are buying them. They're not buying existing homes, they're buying new homes in general. And so if mortgage rates continue to come down, we're not even starting construction. So what's going to be available in a year if mortgages are not 6, but let's say closer to 5? So this is 6.25. Let's say 5.5, 5.25. Well, we haven't even started building new ones, and we're already falling from our peak, a significant fall in our peak. So prices would likely go up, huh? So we've covered it a million times, but Bitcoin is supposed to go up, okay, in January. One of the things we covered in our 2-hour webinar this morning inside of traders.com is not like, oh my God, look at Bitcoin. Well, Bitcoin's at 95. It was 85. Like, it's old news, dude. We've already analyzed where the tops could possibly be statistically and psychologically. But one of the things we covered this morning is the plan for Bitcoin in February. And it's significant. Yeah. We've already planned out February. So going back to like John, Texas. Was that right, Jim? Right on. I'm happy with that. I own it. But if you don't have a plan for February, you can't prepare in the second half. Sorry, you don't have a plan for February. It's impossible for you to prepare to execute the plan at the end of January. Therefore, what you're doing today is just a dog chasing his tail, waiting for everybody else to do something and then try to do that too, and then find out it doesn't work. Yeah. And so we knew this in December. Guess what? Yeah. And so now we already have analyzed February. And now our goal is to observe if it starts to happen in the second half of January so that we can prepare for, let's say, continuation or reversal of, depending on the analysis. Well, I've already done it, so I'm not going to do it for you. But if you subscribe to TRADARS, you would know. Let's do some technicals. So now, John from Texas. Now you would drop into this day trade because you're opinionated on where it has been going and where it's going to end up. Wait. So you might be a bull on Dow. Aiden's bias is 60% fundamental and 40% technical. This analysis over here is 100% technical. And what's the analysis here? Did you see it? What's the analysis? Buy a dip. Oh, that's easy to understand. Yeah, I know, right? Today's target is between M4 and R2. And we are projected to hit that today if this continues up. We're bullish and conservative. So now that the markets are open, maybe there's an acceleration throughout the day. Yeah. Cool, right? Quant score, 39. Seasonality, 3.7. Institutional capital flows are actually out of the Dow week over week. Okay. Now we have today's projection, but we have a 14-day projection. "14-day projection, none of it based on opinion. Pure analytics. But going back as much as 20 years of analytics on dozens and dozens and dozens, if not hundreds, if not thousands of variables. And that's the clean and simple output. Kind of cool, right? I think we lost John, though, right? After all that. John, tell me you're here, Johnny. Oh, Johnny boy. Yeah, right on, man. And guess we can look at that crypto. Not loading crypto. Yeah, man. It was funny. Just right before we started this webinar, I noticed there was a glitch in the overview of Aiden explaining research. So I fixed that and broke everything else. So like this isn't even loading now, which is amazing. It was loading earlier. So my fixes have broke things, and I don't think it's helped much on it. Interesting. Interesting. Steampy. Oh yeah, just everything is down now. All right, well, I guess that'll leave us where we are. Again, the system isn't broken. I fixed something which tweaked something which then took it offline. In the next 5 minutes, this will all be up back and running. I just can't do it while I'm doing the webinar and stuff. So it's a good time to bid adieu. So please click the like button and leave a comment on the recording. I don't know. Does that actually help anything? I only say it because I'm on YouTube and I think I'm supposed to, right? Don't forget to like and subscribe and click that thumbs up or click the bell icon. I don't think it means a difference, but whatever. I like it. So let me go kick the server, and this is all up and running. Remember, most of everything you saw today is free. I want you to want this. Right? So if you go to TRADARS.com, it's free. Simple enough, right? Free. And then freemium. So stop by and give it a try. Peace on earth. May the pips be with you. May your profits be above average. I'll see you when I see you.